Hey guys, so the other day I wrote this article called A Checklist for Layer 1 Blockchain Investment. And the idea is that if you look at Layer 1 blockchain systems, they're like economic ecosystems, like the nation states, like we talked about before, right? But if you look at economic ecosystems, there are various factors of why some ecosystems thrive while other ecosystems die. And this is such an interesting topic. There are, thousands, if not hundreds of thousands of books and treatises written about these topics. And it's very complicated, and you can there are basically a lot of interesting researches, a lot of theories about why some countries thrive, why some countries become empires and economic superpowers, even if they started small and they didn't have much resources, and why there are countries that just don't grow or don't create much value added in the long term. Countries like I don't want to name names, but you can think of many, right? In South America, for example, there are countries that used to be very promising, and they have a lot of natural resources, supposedly having so many, natural advantages for growing their economy, but it just didn't happen. So a lot of people study why these are, things are like this, and many theories are being created. So I wrote this article based on this framework from Michael Porter, which is in fact, a company, a microeconomic researcher. He researches about companies and what makes companies tick. But he has this framework that basically lays out like 4 conditions for an economy to thrive. I'm not saying his work is the best or anything, but it's like provides a reasonable framework for you to like hang your thoughts on, right? And to bounce ideas off. So in that sense, I find it quite useful. So in this article, I talked about like 4 aspects of factors that will allow a economy to thrive, both a nation state economy and a quote unquote blockchain nation state, like virtual economy in the metaverse, right? So there are 4 kinds of factors. Number 1 is you gotta have sufficient availability of input resources like human capital and financial capital and infrastructure. And secondly, you should have sufficient competition, but not like so cutthroat so nobody can survive that kind of competition. But you have sufficient competition that at this level that it's a motivating factor, but it's not like a killing factor for the players that are trying to innovate in your ecosystem. And the third factor is that you should have a basically upstream, downstream industries and suppliers and customers of different basically the players within the ecosystem being suppliers and customers of each other, so that they can help each other out and forming these so-called industrial clusters that they can basically uplift one another and bring the ecosystem progress along with them. And fourthly, the fourth factor is the quality of the domestic demand, which is quite important, especially when you are as an ecosystem when you're small, because as an entrepreneur, if I produce a product, I need my customers to give me feedback about whether I'm heading the right direction, whether this is something that the market will want or not, right? If the customers, if the domestic customers do not give the correct market signals, so to speak, then it will impede my ability to compete internationally. In other words, cross-chain. So that is the analogy that I was drawing between, if you look at what makes a economic ecosystem, a physical economic ecosystem thrive, the same principles can be applied to blockchain ecosystems. So a lot of people send me questions, and we're going to look at some of them today, okay? So The first question from Devouring Beauty, and this person says, centralized exchanges already on-ramp funds to layer 2s, which are fast and will be faster as time goes on, outside of the need for speed for some future game. What's the other differentiating use case of Solana and other layer 1s, alternative layer 1s, when L2s exist and inherit security from Ethereum with low fees? Okay, so this is something also a lot of people on Twitter is trying to debate with me about this. Basically, I was saying, the layer 2s are all well and good on Ethereum, but they're not going to kill the alternative layer 1s like Solana or Terra or Avalanche of the world. And I think the reason is, to me, the main reason is those ecosystems, they have their own base supporters, they have their own group of fans, they have their own token hodlers, just like Ethereum. So when you are in a ecosystem, if you're in the Ethereum ecosystem and that's all you do, it's sometimes hard for you to see that there is actually other thriving nations out there, especially if you're a big country. Like I live in the United States. I can tell you most people in the US, that's all they care about is the US. They don't know what's going on in the outside world, and especially if you go to the central part of the country, it's even more so the case, because that's all they need to know, because the country is big. Why would people be interested in caring about other things that exist in the world? But there are thriving ecosystems, and there are thriving communities outside of existing the older layer 1s like Ethereum, and they're not going to die just because Ethereum developed layer 2s. And also, there are pros and cons of different scaling solutions, and there is no one solution that has all the pros without cons. And as the alternative layer 1s, right now we're calling them alternatives. In the future, when they grow bigger, you would just call them layer 1s. It's just like back in 2000, before 2017, or I think before 2020, you hear this phrase altcoin, right? It's like anything that's not Bitcoin is a altcoin. It's because Bitcoin was all there was. But nowadays, you hear this phrase less and less, and especially when you hear people use this phrase, usually they are people that have been in this ecosystem, have been in this space for a long time, and it's a lingo that they inherited historically. Okay, so but what I'm trying to say is, if you look at the alternative layer 1s, there are different segments, different sectors of applications being built. They have their own DeFi, they have their own NFT, and they have their own games. And players in that ecosystem, it's very easy to interact with other players in that ecosystem on the same base layer. And that is advantage of of being in a alternative layer 1 versus a layer 2 of a existing ecosystem. And there is arguably more segmentation going on. Now, you can argue, hey, that's not actually a big drawback. In the future, you have bridges, you have cross-chain solutions that will make that a non-issue, and that may be true, but at least that's not what's happening today, right? Today, you have new apps are being built and new projects being launched on these alternative layer 1s every day. And a day when better scaling solutions are not being deployed is a day when these alternative layer 1s are going to grow. And to a certain point, when they have grown sufficiently to a certain point, the network effect becomes harder and harder to ignore, right? So I again, I'm not saying I'm pessimistic about Ethereum layer 2s. I'm definitely not, okay? So the newer solutions, the ZK rollups and the Stark, when they come out, I will probably invest in them. But I will first need to see the traction first, right? I will first use the product first, and see if I like them. But I will probably invest, because that's definitely something that you have to do on Ethereum. You have to scale, and you have to find better scaling solutions. But that does not mean those solutions will kill the alternative layer ones. So that's my point, okay? So I think sometimes people, when we are invested in one ecosystem, we tend to get a little bit overly emotional and overly defensive, and we think everything else is shit. But that is just not true, okay? So, and similarly, I don't think the alternative layer ones will kill the Ethereum layer 2s either. And the other point I want to make is, once a layer 2 gets big, it becomes, once the layer 2 gets big and it has its own token, and the token is being used for the transaction fees on the layer 2, and the layer 2 has its own staking system, has its own verification system, it becomes more and more like a alternative layer 1. Okay, in the technical sense, obviously it's very different, but from the end user point of view, it will feel very similar. Like to me, if I want to jump from Ethereum to Avalanche, it feels very, very similar to jump from Ethereum to Arbitrum, or to Polygon, or to something else. Okay, so for the end users, for the majorities of end users, I just don't think people will care. And so once the layer 2s, if they are competitive and they have their own tokens and their hodlers will be their own communities, it will be very similar in terms of value accrual and creating their own network effect. It will be very similar to an alternative layer 1. So the bottom line is, if that's the case, I don't think the majority of value accrual will be onto Ethereum. It will be onto the layer 1 and its own token, from an investment point of view. From a technical point of view, it's a different solution to a alternative layer 1. That's true, but as an investor, I don't care. I care about where the value accrual. So that's that. Next question from B. What's your view on Cardano as an ecosystem? I have no view, because I have not seen any apps built on Cardano. I don't know how good it is or how bad it is, and I would not invest, because I would only invest in things that have already got traction. And what are the chains that have gotten traction? It's very easy to find out. You can go to a website like DappRadar or DeFi Llama. You can look at how many projects are being built on each chain. What's the value locked? What's the growth of users? Different metrics. It's all laid out in the open, and it's a very obvious thing. And the token, the layer 1's market cap, or layer 1 or layer 2's market caps, it's not like such a close tied one-to-one relationship, but you can see a pretty clear relationship between the market cap and the network growth in the ecosystem, in terms of wallet, in terms of transaction volume, in terms of TVL, in terms of how many apps are being built on these chains. So, but when there's no apps on this chain, I just don't know what to say. Okay, because I have no information. Next question from Baker Street. Open source creates more competition and innovation because anyone can build upon and improve your idea. Incentives are not always destroyed either. Okay, so this is in response to something, a point that I was trying to make in my article. I said there's this, blockchain has this great culture of open source, right? A lot of projects are open sourced, and people can, stand on the shoulders of other giants and create continuous innovation. And that is one of the reasons why the innovation is happening faster in a open system like public blockchains compared to some of the traditional, more closed gate systems, right? So, but anything has a double-edged sword, right? So it cannot be, for people to be entrepreneurs, that you have to give people incentives. The incentives, the bottom line at the end of the day is people have to be able to capture some type of rent from their unique IP, at least for a period of time. If it's perfect competition, there is no capitalism. That will be an incentive destroyer for sure. So, I again, please don't see this as a black and white statement. I'm not saying open source is bad. That's definitely not what I'm saying. I'm saying there needs to be a balance. And sometimes I see people kind of, saying like closed source projects is bad. I think that's dangerous. Because it's kind of like the political correct woke culture in some parts of the world, unfortunately. It just makes people shut up and stop speaking about their own truth. Not good. In the long term, I think that's an incentive destroyer. Again, everything is a balance. Open source is a great thing. Okay. Next, not worth my batteries. What are your thoughts on meme coins like Sheep and Doge? Okay, so I have some of these coins. I have a little bit. I don't see them as a investment. I see them as like being fun. It's a fun thing to hold a little bit, because they can go up a lot, because you never underestimate the power of meme, the power of culture, right? But on the other hand, there is really no underlying economic demand for at least so far, right? In the future, I don't know. Maybe people invent something of value added out of using the Sheep or Doge network. I don't know. But in this sense, they are quite similar to Bitcoin. It's a system that is running on social consensus, running on the belief that this thing has value, and we prescribe value to it, and it's got a certain token economics that does not impede with the with the social consensus that this thing has value, and therefore it has value. So this is the same rationale for Bitcoin, for meme coins, for a lot of NFTs that does not have any intrinsic utilities, right? So there's nothing wrong with this. And these things, they can go up a lot, especially in the current environment where there is a asset shortage, and people are desperately looking for yields and looking for alternative things to invest in. On the other hand, because there is no underlying there is no, so to speak, a floor of demand from underlying economic activities. For example, on Ethereum, you always have that demand as long as there are activities on chain, as long as there are NFTs and DeFi apps and games are being used on chain. You will always need Ethereum. You will always need Ether, right? So that's what I mean. The underlying economic demand for this particular currency or token. But things like Bitcoin or Doge or Sheep, they don't have that. And most of the NFTs, at least so far these days, don't have that. So that just means the price is going to be more volatile. And a day when these things don't have underlying economic demand is a day that price will continue to be volatile. So this is a great thing if you're a short-term trader. If you're a vol trader, this is like a dream come true, right? If you're good at reading charts, if you're good at reading like short-term indicators like sentiments or on-chain activities, you're tracking wallets and things like that, then please go ahead and play this. For me, I'm a long-term investor. This is not something that I would put a lot of money in. Okay. Next question from Nyasha. What do you think is the balance of VC funding and decentralization? Parenthesis, community ownership. Developing the system requires funding for sure, but heavy VC involvement may demotivate the 1,000 true fans if incentives are not aligned. Okay. So this is in response to something I said in the article. I said, because one of the criteria, one of the item in the checklist is there financial capital, sufficient financial capital available for the investments needed in developing this ecosystem, right? So there are different ways to get money. VC is one way. You can do like a token sales. You can do SPAC. You can do, other ways of collecting investments. The reason why I brought up VC, and I said basically there is a group of people, especially early adopters in crypto, that think VC is shit, basically. Don't touch anything involving VC because these are vulture capitalists or whatever. I think this is more of a political statement rather than reality. So the funny thing is we live in a time where when people, the general sentiment is everyone is very frustrated, right? Because wealth inequality has been going up and the wages are not catching up with asset prices, and income inequality is going up, and you have all these and social instability is increasing. So people are finding it harder and harder to actually get ahead, so to speak, in society. And we are living in this time. I think that's one of the main reasons why there's so much resentment and suspicion about so-called establishment, the traditional institutions being it hedge funds or governments or venture capitals. Okay, so that's totally reasonable. That's totally understandable, but it doesn't mean that these sentiments are directed in the right direction. There are underlying reasons of why inequality is going up and wages not going up fast enough. There are many structural reasons for this, like globalization, demographics. These are technology change. These are much bigger factors than anything a single government or a institution can do. I think sometimes people are overestimating the power of any institutions. And especially people who have different kinds of, conspiracy theories of how, these people in the government or in hedge funds must have these grand plans that has 20 steps ahead and just, connive these grand plans, evil plans to fuck up everybody else. I think they are giving institutions too much credit, to be honest. Decision makers in any institutions are human beings, and human beings are intrinsically short-sighted. We basically tackle whatever problems we have at hand. We have very limited foresight of what will happen, what our actions will actually, the butterfly effects they will create, 2 steps or 3 steps down the road. Either we cannot see it, or it's too far ahead, and we just, there are more urgent things to resolve, so we just cannot afford to care. So in any case, how we get where we are as a society is very complicated, and I don't think it's fair to blame the institutions, though it has become, is that the establishment, the institutions have become a punching bag of people's frustration. So all this long-winded rant, this digression, is to say that I think people are hating on VC money for reasons that are less substantiated than they seem. To me, it's very simple. You have a project, you need investment. VC is just wholesale funding, right? If you need 300 million, you go to 2 VC or 3 VCs instead of doing a public offering and offer and collect investments from 10,000 small investors, which in many cases are much harder to deal with. Right? So that's why companies don't go public unless they are really, really ready to go public, because it's a transaction cost, and it's a huge cost on its own. You basically, when you're in the public market, you're dealing with much smaller investors in batches. It's a full-time customer service customer service cost, sometimes much greater than the cost of having to deal with a few larger investors. So if wholesale funding makes sense, you should use wholesale funding. That's how I see VCs. It's like obviously situations differ, and in each and every deal, the negotiating power of different parties always differ. But these days, with so much money flowing in crypto, and there are so many people with money in this space, and everybody can set up a fund. I can set up a fund, you can set up a hedge fund or a VC fund tomorrow and then call yourself a fund manager or a VC investor. It's very easy. Okay, so it's so I don't think this argument is so clear cut anymore, and there are also a new tier, a new generation of so-called venture capitals that work very differently than traditional venture capitals, as most people understand. So, but on the other hand, these are professional investors, and they are supposed to be investing in technology. So they're supposed to be doing their own due diligence and doing their own research about the space. And in other words, doing the job for you, the retail investor. So so that's one reason why I say if a project, especially if it's layer 1 project, meaning you need a lot of investment, right? So to get the thing off the ground, you don't have any VC involvement, then I wonder why. Is that a conscious choice, or is that because you couldn't get anybody interested? Because when you get the right wholesale investors on board, it's an asset, not a liability. So I think you have to look at this case by case. But in general, if I see there's no institutional investor, so-called institutional investor involved, or there's no whales involved, I wonder why. Right? So at least that's the question that you should ask. It's a checklist. It's not like it's not like 10 Commandments, right? So these are things that I think questions that you should ask just as a way to do your own due diligence. And the other reason is because when you have a institutional player involved, in other words, someone with deep pocket involved in your layer one, they also are more likely to get involved in other projects that are built on your ecosystem, and that's what you want, right? You want to have a steady and reliable stream of financial resources available to invest in your ecosystem. So when a institutional investor invests in the layer one, that's only the first step. What it tells you is it signals that there's more funding coming to back whatever are going to be developed on the ecosystem. And if the ecosystem is going to thrive, think about it, you're basically bootstrapping a country, right, out of thin air. It's going to take a lot of financial resources. So I don't see why not use wholesale money. So yeah, so that's my response. Next question from John King. He's saying, could Amazon AWS create its own L1 blockchain marketplace metaverse and allow it to be used by the public and allow dApps, SAPs, and token economic governance like other layer ones, and do it at higher scalability and lower cost, and have an inherent advantage in money infrastructure and network effect, and they will outcompete these semi-decentralized layer ones. I don't think that's a hypothesis anymore. I think that's already happening in reality. I just checked my Kindle the other day, and I noticed I got free drop of Kindle tokens from Amazon. You know, Amazon is telling me hey, you can use these tokens to exchange for, I think it's some kind of stories or some kind of short books on Kindle. I don't know. I'm sure this is just like one of the many things they're doing and using tokenization. And maybe one day they'll run their own blockchain and open up the system for anybody to be able to build applications on. That could happen. But it's at least it's not happening right now, right? And I think for good reasons, because if you already are a large company, you have a business model that is working very, very well. Why are you looking to cannibalize your own babies to go invent to go something new that is not nearly as profitable? I'm not even like 1/10th, 100th, or 1,000th profitable. Because most of the blockchains, if you look at it, especially the alternative blockchains like Solana's, Avalanche, these chains, they're now quote unquote profitable if you look at the system as a traditional company, right? It's because the transaction fees are very cheap. So if you look at the company revenue perspective, they're not having much revenue. So you cannot expect Amazon will give up its own AWS or traditional hosting and e-commerce platforms and go full on build a public blockchain and encourage everybody to do that, to build on top of that. But on the other hand, this is the so-called innovator's dilemma, right? The incumbent, they don't invest in the new technology because it's not profitable, because they don't want to, they don't want the new thing. They don't want to invest in a new thing that ends up competing with their existing cash cow, right? But on the other hand, Amazon also knows the innovator's dilemma. Those are smart people, right? And they're very innovative. It's an incredible company. It's hard to be so innovative when you're so big. I think they will they will have they will venture into the blockchain space in some shape or form. They will have their own tokens. They will have tokenization of some of the products and offerings and services with tokenizations, without a doubt. How far they will go, that's a totally different question, because there are disadvantages for them being a bona fide corporation to be offering a public blockchain that is essentially its own economy. You see that Facebook tried to develop its own stable coin and was being repeatedly shut down by the government, right? Because the government doesn't like the corporation playing nation states. When you are public blockchain, you're not a corporation. You're not, you're not already a gigantic going concern that is profit driven. It's a very different proposition. So I think in terms of governance, in terms of flexibility, in terms of how far it can go in the blockchain space, these current governance models of public blockchains have some advantages over the traditional enterprises, even if the traditional enterprises like Amazon can still offer a centralized blockchain like Binance Smart Chain, right? And they can do it better. So actually Binance Smart Chain is a good example. It's very cheap. It's very fast, and it's got huge traction, but it hasn't killed other alternative solutions. It hasn't killed Ethereum, and it hasn't killed all the other newer chains, right? So I think we will probably see a mix of all sorts of players in the ecosystem in the future. But I definitely do not think these will be Amazon will be the Ethereum killer or Solana killer, or things like that. What else? Oh, I also got a bunch of questions from people basically essentially asking what to invest in. I'm not here to give financial advices, obviously, and your portfolio allocation depends on your risk tolerance and on what you want to do with your money and your financial goals. All that being said, to me, I think when I look at next year, right? Well, first of all, it's hard to predict the timing of these things. So instead of saying next year, I would just say next step of development for the ecosystem. I think the value accrual, the new value accrual will be in cross-chain solutions and blockchain gaming. And the reason is that if you look at how the ecosystem, how this entire space developed over time, right? In the very beginning, you have things like Bitcoin, which is a political statement, essentially, and it attracted a cult following, and it bootstrapped its own network effect, and it becomes something, even though it doesn't have a quote-unquote real-world use case. It's you can store the so-called value store. You can you can use Bitcoin to store your wealth if that appeals to you. So that's a very basic level of like a proof of concept use case. And then you have these and then you had Ethereum, which allowed you to build applications and more complex scripts and logics on top of blockchain, while still taking advantage of the open source, open public nature, transparent nature, decentralized benefits of the blockchain model. So then you see that didn't for a long time we didn't see, long time being a few years, which is not that long. We didn't see like a substantial like new use cases being built, right? We had like you have 2016, 2017, many people try to invent like explore the space in all sorts of directions, try to find the use cases for blockchain, and most of them failed, as you would expect. But some things started to emerge, some actual use cases, which happened. Fast forward today, you have two main use cases are DeFi and NFT. So you have more and more people being drawn into the ecosystem because of these use cases, which is still not that many, but it has caused a lot of growth in the ecosystem aside from the speculation aspect, right? So and then if you suppose like we are at the end of the year, and if you think, okay, where do we go from here? And I would say if you look at the fact that you have so many new chains coming up, and some of them are getting serious traction, right? Whether it's layer 1 chains or the upcoming layer 2 scaling solutions that build on Ethereum, and other chains will have layer 2 solutions too. But some of them will get traction. So you have all of these different chains, right? They all have their own little ecosystem being built, and everybody try to get bigger, which they will, at least some of them. And then people will start, and then the need for building highways will get stronger as these different chains grow. It's like if in the beginning of the world, when you only have one country, you have nowhere else to go, then you don't need any highways, you don't need airplanes, you don't need like ocean liners, right? You just stay where you are. But when you have more countries in the world, then people start to travel, and you have the need for roads, for railways, for shipping routes, for ports, grow bigger and bigger. So that's why I think right now obviously we have like bridges and whatnot that you can bridge your assets from one chain to another, but none of them are very good still, and they're really slow, and they're really kind of precarious. If you try, I think it's a little better now. A year ago it was even worse, but still, if you bridge an asset from one chain to another, it's kind of a psychologically scary experience. And if that's just when you are just using the product on the front end, right? As a user, if you know what's going on in the back end, you're probably more scared. Okay, so I think so. But the demand for that kind of use cases is going to grow a whole lot once different chains are starting to get traction, and you have little kingdoms, big and small kingdoms springing up everywhere, and you will need connected tissues among them. So that's why number one, I think that's a use case that's going to grow in from the infrastructure perspective. And the number two thing is that aside from NFT, aside from DeFi, what other use cases are we going to see in the blockchain space? Now, in the future, everything will be tokenized. That's what I believe. Every financial asset, everything that has a cash flow attached will be tokenized. But what I'm talking about is, like, if we talk about immediate next step, what's the use case? I think gaming. Why? Because you already have like a lot of crypto adopters in the system, okay, who are young, who have like a tech savvy, who have a high overlap with the gaming community, and also you have this activity that is just like NFT, that has meme value, that is fun, that is addictive, that has that is very easy to, not very easy, but it has a setup to get community traction, to get network effect. Like gaming is one of those things that fit all these criteria. So I think that's why I think that would be the next very natural use case that will get traction. Now you may say, oh, there's already Axie Affinity, you're talking about yesterday's traction. But no, I really seriously think you haven't seen anything yet. Axie Infinity is like a proof of concept project, and this space is going to get a whole lot bigger. So that's why I think gaming will be the next thing, and so many people are working their ass off to build good games on blockchain, and I'm starting to see some that are not so cringy. Okay, so which is a good sign. But obviously, you have all these other things. You have like storage. You have community tokens. You have bridging off-chain assets on-chain. You can say, oh, all these are promising use cases. Yes, they are. Okay, but if we are talking about a time frame of when these things will actually get traction, I think the gaming will be the fastest one among these different, also very promising things. Okay, so that's all for today. I will talk to you next time.